Good morning, everyone, and welcome to today's session. We are seeing a lot of people entering the room, so we're just going to give everyone a few more minutes before we begin today's webinar. Good morning again, everyone, and thank you for joining today's session. We are hosting the second session of GEFA Water 101 series. My name is Alana Kinnebrew, and we'll go ahead and get started. I am the project manager with a consulting firm called IB Environmental, and I will be assisting GEFA with facilitating the webinar today. Next slide, Amanda. Now, the main goal of this webinar is to empower you as local government staff to start the loan application process, even before you engage external consultants. Now, the staff here at GEFA is very approachable, and they pride themselves on this fact. So we encourage you all to make sure to reach out and contact them with any questions you may have as you're going through this process. Now, to be honest with the staff, as staff of the SRF program, they are under some pressure to get the funds loaned out. So we want to, again, encourage you all to reach out, make sure you get those questions answered so they can talk to you guys. Now, I did want to let you know that you should most definitely take advantage of the information that we are sharing today during this webinar. So let's jump right in and get started. Now, we are using the GoToWebinar platform, and I'm sure many of you are familiar, but just in case you are not, I will be going over some brief logistics so you know where everything is located. On your control panel, which you should see in the right-hand corner of your screen, there are options for you to submit questions. You have given a lot of your valuable time to join this webinar, so make sure that you're making it count and get those questions answered. There are polls that will be done throughout the webinar that will pop on your screen to make sure that you're engaged and understand the information that's being shared. And lastly, we will have a post-webinar survey that will appear on your screen at the very end. So if you will take just a few moments to complete that, we would appreciate it. And if you do miss it, don't worry, we will include the link in a follow-up email once the webinar is over. So again, directing your attention to the control panel. It is fairly simple to navigate. You will use the top red button, which has a horizontal arrow on it, to maximize and minimize the control panel. There is a raise your hand button. That is a feature we like to use, so keep that in mind of where it's located in case we need to use that throughout the webinar. Again, questions, the option is there for you to enter any questions and hit submit, and the staff will see it and be able to answer those questions either during the webinar or at the end during the Q&A session. And I do want to emphasize that we do have handouts. You should see 4 handouts listed on your control panel. You are able to download those handouts so that you can follow along with the presentations and write comments and take notes if need be. Lastly, this webinar is being recorded, and the link for the recording will be shared in that follow-up email, so that way if you need to go back and review it, you are able to do so. All right, now let's begin by introducing our first speaker, Amanda Carroll. Oh, here is a brief agenda, I do apologize, of our order of the webinar. Again, I just went over the logistics. Amanda will be our first speaker, followed by Shalina, who will go over the application financial requirements, and then we will jump into that Q&A session. So again, we are going to go ahead and introduce our first speaker, Amanda Carroll. Amanda is a senior project manager with the Water Resources Division at GEFA. In this role, Amanda works with communities to provide low-interest financing for water and sewer infrastructure projects. She handles projects from start to finish and therefore knows the ins and outs of the loan application process, loan development, technical assistance to the borrower during construction, and loan closeout. Amanda is here today to give you a brief recap of session 1, as well as to share the potential scoring changes that may come about this fall. Amanda, the floor is yours.
Thank you, Alana. I appreciate that introduction. Good morning, everyone. Thank you for joining our webinar. For the objectives today, we'd like to give a refresher on the loan program, the call for projects, and the first few sections of the loan application. We will be discussing a couple changes GEFA is considering for the project scoring criteria in the call for project section, which is something that is new and was not discussed during our first GEFA 101. I will then turn the presentation over to our finance division to go over what is required to be submitted for the financial section of the application, as well as the underwriting process. But before we get started, have a quick poll question to kick things off.
All right, everyone, you should see the poll on your screen. And the question is, did you attend the GEFA 101 session held in May? The answer options are yes, no, and did not attend, but watched the session on YouTube. All right, we are going to give a few more seconds as we get these answers in. We have about 85% of votes. All righty, we are going to go ahead and close that poll. And Ben, if you could share those answers for us. All right, we have Amanda, 26% said yes, 70% said no, and 4% did watch the YouTube session.
Perfect. For those that answered no, welcome. For those that answered yes, welcome back. And for those that would like to watch the first webinar session, I believe we will put a link to it in the chat box. All right, let's get started with our first section, the loan program refresher. The Water Resources Division supports the development of water, wastewater, and solid waste infrastructure projects, which help protect the environment, facilitate economic development, accommodate population growth, and safeguard public health. The entities that can borrow from GEFA are local governments, municipal corporations, county or local water, sewer, or sanitary districts, state or local authorities, boards, or political subdivisions, and non-governmental entities or NGOs whose primary mission is land conservation. So this slide is just a brief overview of all the funding sources and the different programs GEFA has. GEFA has two funding sources, state and federal. The state program is the Georgia Fund, and the federal programs are the Clean Water State Revolving Fund, or CWSRF, and the Drinking Water State Revolving Fund, or DWSRF. The Georgia Fund program can fund water, sewer, stormwater, solid waste, and solar projects. The Georgia Fund program is usually reserved for projects that are not eligible for the CWSRF or DWSRF program. These projects, for example, are emergency loans, drinking water economic development projects, solid waste facilities, reservoirs, and dams. The interest rate for a Georgia Fund 20-year loan is 1.67% with a $3 million per year borrowing cap. The SRF funds have federal requirements such as the state environmental review process, which we will discuss further in a later webinar, Davis-Bacon, Disadvantaged Business Enterprise, and American Iron and Steel, or AIS. The SRF program also has principal forgiveness opportunities, and the interest rate for a 20-year loan is 1.13% with a $25 million per year per program borrowing cap. The CWSRF funds sewer, stormwater, solar, and land conservation projects. The DWSRF funds solar and water projects as long as the primary purpose is to facilitate compliance with national primary drinking water regulations or advance the public health objectives of the Safe Drinking Water Act. The next section I'd like to go through is the call for projects refresher. GEFA's annual call for projects for this year is tentatively scheduled to open September 1st and close on February 28th of 2022. Applicants of potential projects must complete a pre-application in order to be scored for principal forgiveness and to be included in the SRF intended use plan, or IUP, which we discussed in more detail in the first webinar. Loan principal forgiveness eligibility is based on a project score and an affordability score. Presented here are the 10 affordability criteria we use to score each community for principal forgiveness. For each criterion, the community receives a score between 1 and 4 based on where they fall within the quartiles. This would give a potential maximum score of 40 points. This affordability score, along with the project score, are both considered when allocating the principal forgiveness funds. The next couple of slides are the new requirement or the new proposed project scoring GEFA is considering for this 2022 call for projects. Since architectural and engineering, or A&E, procurement is now required for all projects with construction costs exceeding $1 million or A&E services exceeding $100,000, GEFA is looking at adding an A&E procurement section to the project scoring criteria. Only one box can be checked, and these selections include: have you developed a request for qualifications for A&E services? Have you posted an RFQ for A&E services? Have you contracted with an engineer in accordance with the qualification-based selection process set forth in GEFA's website? Or for those projects with construction costs less than $1 million and engineering costs less than $100,000, have you contracted with an engineer? We have not yet determined how many points a section will be worth or how many points each box will be. The next section, proposed project scoring, is project readiness. Previously, the project would receive points only if the State Environmental Review Process, or SERP, had been fully complete. This meant the categorical exclusion, or CE, or notice of no significant impact, NONSI, had been fully approved. GEFA is considering breaking project readiness up into 4 different milestones. And here again, only one box can be selected. And these milestones are: the project description has been submitted to GEFA and a loan number has been requested. The CERT package has been submitted to EPD. The CE or NONSI has been issued, or the CE or NONSI has been approved. And here again, we have not yet determined how many points this section will be worth or how many points each box will be. Okay, next, I'd like to now give a quick refresher of the first few sections of the application before turning it over to our finance division. The application can be found on GEFA's website. GEFA's board meets quarterly, and applications must be submitted at least 2 months prior to the desired board meeting. GEFA's next board meeting is August, and June 1st was the deadline for those applications. GEFA's next board meeting is in November, and therefore September 1st will be the cutoff for those applications. The first part of the application asks for the contact information for the borrower. Section 2 asks for project information. The first questions ask the borrower what funding source they are looking to borrow from and what intended use plan or IUP the project is on. Because remember, we cannot fund projects unless they are on an IUP. The next question is in reference to the status of the State Environmental Review Process, or SERP. The following section asks for a description of the project. This description helps the project manager determine if the project is eligible for funding, develop the project scope for the loan agreement, and determine if there are any conservation elements of the project. The conservation element is important because those projects are eligible to receive a blended interest rate based on the cost of the conservation pieces of the project. In this section, you will put in the project budget, schedule, and desired loan term. In the project cost section, the borrower will also list any additional funding sources that will be used for the project, such as CDBG, USDA, or local funds. The schedule section is used by the project managers to determine the most appropriate board date for a project, as well as to calculate the repayment date for the loan documents. Below the schedule, you will see the desired loan amortization period section. GEFA offers loan terms from 5 to 30 years, and we ask the borrower to certify that the useful life of the assets funded by the loan exceed the amortization period of the loan. Lastly, in this section, you will confirm that the proposed project is consistent with your service delivery strategy. Thank you for your time today, and now I'd like to turn it back over to Alana to introduce our speaker from our finance division.
Thank you so much, Amanda, for that refresher. Again, just as a reminder to you all, if you have not been able to watch the first session of the GEFA 101 Water series, please make sure to click the link in the questions box that has the YouTube page, and it will allow you to view that loan application process in detail from that first session. Now, if you have any questions at this time, make sure you are submitting those through the questions box on your control panel, as I mentioned before, and we will make sure to address those as we can towards the end with the Q&A section. Now, just a quick test to make sure everyone is still with us. Please take a look at your control panel and click the raise your hand button if you have downloaded the handouts. All right, all those who have downloaded those handouts so that you could follow along and have the information, go ahead and click the raise your hand button. Awesome. I am seeing hands going up, which is a great thing to know. So make sure that if you haven't already, go to your control panel, go to the handouts and download that information. We want you to have everything handy as we jump into our next presenter. So we have Shalina Ali here with us as our next presenter, and she is the Senior Financial Analyst with nearly 15 years of experience in fiscal compliance and portfolio management at GEFA. In her role as an analyst, she has written over $400 million of fund requests for local governments within the state of Georgia. It is my pleasure to introduce Shalina as she gives you all a behind-the-scenes tour of how GEFA analyzes your finances to make their loan decisions. Shalina, the floor is yours.
Thank you, Alana. Thank you so much. You can hear me, right?
Yes, we can, and we see your screen.
Great. So good morning, everyone, and welcome to GEFA's 101 training for financial requirements of our loan program. I'm Shalina Ali, and I'm a senior analyst and underwriter for our loan program. And in my presentation, I will try to go over the things that we look for when we are reviewing the loan application from the fiscal point of view. GEFA loan application consists of 10 pages. Pages 1 to 6, Amanda went over them with cost estimate, schedule, and other things required by the policies and procedures from federal and state. Page 7 to 10 are the information that we are looking for from the financial perspective. And this information is very critical for our underwriting. Yes, I understand that 10 pages is a long application, but think about it that borrower has done lots of paperwork and got an EPD approval and the project is shovel ready, but they cannot move forward because GEFA has not granted the funding yet. And the majority of the times in my experience that I have seen is that has happened because we are still waiting from the financial information from the borrower because we didn't get the information on our loan application. Either it was incomplete or either we are waiting for other stuff. So we thought that we can do this presentation and walk the borrowers through the process to fill out those pages so we can do the things quickly for them. Just keep in mind, I will be using the words borrower, community, city, or sometimes you interchangeably, but it means that I'm talking about the borrowers. Okay, so page 7. This is the page 7 of our loan application. It starts with asking the financial reports from the borrower. We ask borrowers to submit the most recent audits or financial reports for the 4 years. Send us a hard copy. We prefer electronic versions, or if it's available on the borrower's website, just let us know and we will download that. Bond ordinance. Before I start bond ordinance, I will give you a little example about the audit. So let's say the borrower's fiscal year is ending or just ended June 30th, 2021, right? It just ended. And borrower is looking to come to GEFA for the funding for their November meeting. I'm sure everybody knows that state of Georgia requires to submit the financials within the 180 days of the fiscal year ends. So of course, the 180 days has not happened yet. December 31st has not reached yet. So at that time, we will ask borrowers to submit the fiscal year 2020 audit and the draft figures or any profit and loss income statement from your system for fiscal year ending June 30th, 2021. So we can have the most current information from the borrower to review. let's say if the borrower is coming next year in May, fiscal year 2022, then we will ask them to submit us their fiscal year 2021 complete audit. If for some reason the audit is not complete, at that time borrowers are asked to submit the letter from Department of Audit approving the extension for their timeline. Now, bond ordinance, normally if the borrower has issued any outside debt like bonds or short or long-term notes, at that time we are asking borrowers to submit us that with the amortization schedule that are not included in your most recent audit. If anything has happened between the most recent audit and until now, then at that time we will ask you to submit it. Otherwise, you can just say NA or not applicable. Funding method, there are different funding methods that borrowers use to pay the GEFA debt or fund their project. It can be service charges and fees, general fund revenues combined with service charges, general revenues only, or SPLOST or local option sales tax. Whatever you check mark, especially with the SPLOST, we need intergovernmental agreement for the SPLOST that tells us, okay, that much has been earmarked for the project or for the city that city will use towards the project. So that's a very important documentation if you are using the SPLOST funds. Any other financial design reports, let's say if the borrower has done recent rate study and they're planning to change their rates for that purposes, submit us that. Any DCA or Department of Community Affairs report or anything that gives us some details about the economic condition of your entity, at that time we would like to have that. If the borrower has done any capital improvement plan for 3 years, 5 years, you have something, submit us that and just enclose that and we will review it. That's our financial report, page 7 of the loan application. Page 8. On page 8, we are asking the borrowers to submit their rate structure, the most recent rate structure which is in place and when it got affected. That's again your current rate structure. Then we want you to write the date of the prior rate structure that was in place and submit us that structure as well, because we would like to see how much borrower were intending to generate revenues from the new rate structure. And if that happened in the past, we want to see if that really materialized. So that's the reason we are asking that those documents. And if you're planning any future rates next year, 2 years down the road, give us details about that as well. Then if the borrower is an authority, let us know, because in that case, the program manager will work with you, because we need some additional documentation for the authorities and they will help you with that. Then one-time operating expenses, expenses that are unexpected. For example, lightning strike to your system or to your and that damaged your electrical system due to hurricane or something happened that borrower's not expecting to happen and they have to spend money to fix that. And that's your one-time expense. And let's say something else happened or sewer or water line broke underground that was not expected. And so the city has to fix it. So at that time you incurred extra expenses, and in the most recent audit, it's in your audit, it happened. Give us the dollar amount, submit your invoices, and give us an explanation that that happened, and we will review it. And if we feel that yes, it was the case, then we will give the one-time credit. Next, expense line items for the current year, that the year that is going on currently. If something has happened most recently, provide us that information as well. Next year forecasted one-time expenses, that rarely happens because you don't know what unexpected thing will happen next year. So that's pretty much a 0-0 at this point. Operating transfers to and from water and sewer fund. If water and sewer fund doing any transfers in and out, we would like to know the details from your most recent year, the current year, and of course the projected year. Sometimes we have seen that water and sewer fund transferring funds to general fund because the general fund has used their own funds to pay expenses, so they are reimbursing them, which is totally okay. There is money coming in from SPLOST fund for either debt payments for prior projects or for capital improvements. Market, tell us, and we will look for that and give the credit. Sometimes I have even seen that water and sewer fund submit or sends a fixed amount to general fund or any other fund annually because it's part of their charter. So if that's happening, let us know and we will give the credit if we feel that yes, it's happening. So this is our page 8 of the loan applications. Make sure if you are writing something, write. If you have nothing to report, mark 0 or NA, because if you left it blank, it means that you have not understood the question, and we will call you when the finance receives the application. If we see anything empty or blank, we will call you and ask you to fill it up. And that, of course, going back and forth takes time, and it will, especially for those borrowers who are under consent order or need the funds immediately, and you are planning to go into the board meeting that you're intending, this going back and forth can delay the process. So if you have nothing to report, simply write 0 or NA. Then that's our page 9. This is very critical page for us to review, and that's the first thing personally I open when I receive the loan application. It has 3 columns. So let's say we are in fiscal year 21, and let's say your fiscal year 21 has already ended on June 30th. So now we are technically in fiscal year 22. So you will write fiscal year 22, fiscal year 23 and 24, let's say, as an example. And you have a developer who's building 60 houses in the subdivision. But the idea is the 20 houses will come in 22, the next will come in 23, and the next will be in 24. So in your loan application, you will write in your residential, you will write 60 on top, 20 on top first, where it says projected number of new customers. That's actually the cumulative of your residential, commercial, and industrial. So you will write 20 in your industrial in fiscal year 2022, 20 in 2023, and 20 in 2024. Don't write 60 in 1 year. Don't add up anything, because we will carry it forward for you in our underwriting. And so does the commercial and industrial. Another example, if the apartment complex is coming for 60 apartments in fiscal year 2024, don't write anything in 22 and 23. Simply write 60 in 2024 and leave 2022 and 2023 blank. So, and then we will carry forward that, and we'll understand what you're trying to say. And the next row, you will write the service revenue that the city or the entity will collect from the customers, and the tap fee or connection fees each year. Not cumulative means don't add up everything together, just leave it as in for per individual year. Rate increase, that's going back to page 8. If the borrower is planning any rate increase, just write the dollar amount that is projected from that rate increase and the percentage, 3%, 5%, and then give us the dollar amount. If you are doing it just for 1 year, give for, let's say, fiscal year 22, just write for fiscal year 2022 and leave 2023 and 2024 blank, or mark it 0. And we will carry forward it. If some borrowers do it every year, if you're doing it every year, 5% each year, write 5, 5, 5 each year, and the dollar amount that, let's say, 10,000 in 22, next year 12,000, and the next following year 14,000. So split that amount and write that into those columns. Additional increase in revenue. If you have anything that, let's say, like we have one borrower last year that came to us because they wanted to expand their sewer system because they were seeing some growth because of the film industry coming into their area, so they wanted to be prepared. So that's their additional revenue that they were anticipating, and so they provided us that information. So if you have that sort of scenario, just write it down. If you're getting a new industry, something in the future that can really add on to your revenues, provide us that information. Regular population growth, normally that happens around the census time, or we have just gone through the census, and if you have additional information, just give us that. If not, just 000. SPLOST, local option test, text. If you or the borrower has SPLOST funds available, provide us the intergovernmental agreement and write the dollar amount. Let's say the borrower is getting for water and sewer fund only $10,000 per year for the next 6 years. That's how they have been earmarked. So write 10, 10, 10 each. Don't accumulate that. Increase in OM expenses. It normally happens, when borrowers adds or increases their capacity. And of course, let's say if the borrower has a new wastewater treatment plan, of course, expenses will grow up, and that's where whatever the expectations are, we would like to see the dollar amount into that. And you can give us that information and we will incorporate in our underwriting. New non-GEFA debt service, anything that borrower is planning to go to the bond market or go to bank or any other lenders to get the debt on their water and sewer fund for a future for the next 24 to 36 months, please let us know or write it there and provide us the details. So that's our page 9 of the loan application. Again, it's very important borrowers to fill it. If they don't have anything to report, mark 00 or NA. Page 10, that's our loan application page 10, where we are asking for the borrowers to provide us the customer and usage information. Here we are asking them to provide us the water customers inside, outside customers inside, and then the number of customers and average usage, that what's the system average usage or residential customer usage, and same for sewer inside and outside, commercial and industrial. And if I'm sure like everybody has some customers, right? It can't be 00, this page, and don't leave it blank, because what happens normally if the borrowers are projecting new rates on page 9, and then we go back and try to do the back of the envelope calculations to see if our numbers are matching with the projections, and if not, then we will come back and ask more questions to the borrowers. So this is our first poll question. GEFA requires borrowers to submit complete financial audits for blank number of years, 3, 4, 5, 6, or 7.
Thank you so much, Shalina. So everyone, please turn your attention to the poll question on your screen. Again, the question is, GEFA requires borrowers to submit completed financial audits for X number of years. So you are inputting the number of years based on the information Shalina just shared. So I appreciate everyone. We have a little over 50% of respondents. Right. We're going to give you guys a few more seconds to submit those answers. Right, and counting down, we're going to close the poll in 3, 2, 1. Awesome. So it looks like 71% responded 3 years, and 29% responded 4 years, Shalina.
Okay, so the correct answer is 4 years. GEFA requires 4 years of the financial audits, and that's an industry standard to get the 4 years everywhere. So yes, it's 4 years. Now we are going to go to our next segment of our presentation about the debt service coverage. And GEFA is a cash flow lender. We need to understand that, and therefore debt service coverage, or we call it DSC, is our primary measure to evaluate borrowers' future cash flow to repay the debt obligations. So in simple terms, if I explain the debt service coverage, it is the borrower's ability to fulfill their long and short-term debt obligations through their net income or net revenue. The key word here is net income, which is revenue minus expenses. GEFA minimum debt service coverage benchmark is 1.05. It means that for every $100 debt that the borrower has, GEFA would like the borrower's net income to be $105. Why extra $5? Because it gives us an assurance that the borrowers have some funds in hand that they can use in case of emergency, and that GEFA loan will not default. The image that is here on that screen, if you can see that, let's say if the cash flow is $100 and the debt payments are also $100, then it is a perfect balance. It's 1, which is in a way it's not good, because let's say if something happened and the borrower expenses goes little bit over than they projected, then their debt service will go down. Not only that, they will not have enough funds to pay the debt, and which is not good. And therefore GEFA would like to have extra $5 symbolically borrowers to have, so they can use it as their emergency funds. And this is our benchmark, and I'm telling you that it is the lowest in the industry. If you go to the bond market, their minimum requirements are around 1.2, which means having extra $20. But here GEFA is only asking extra $5, because it helps the small communities who cannot afford to go to the bond market and get the lowest interest rate that GEFA and state of Georgia provides. Next slide. Okay, so how we calculate 1.05 and what is the formula behind it? So all borrowers are contractually required to maintain 1.05 for the term of the loan. Given we cannot predict what will happen in 20 years, we start with the first 5 years of debt service coverage once loan goes into repayment, and after that we monitor it through our annual review process for the term of the loan. Okay, so this is the formula of debt service coverage, that is cash flows, which is your numerator, and debt service is your denominator. So what is cash flows or available income? It may look like a little bit too much financial jargon, but just bear with me for a minute. We will go and practice this on the next slide. Okay, so the cash flow is operating revenues minus your operating expenses, plus we add depreciation and amortization. That's your numerator. And your denominator is your principal and interest payments from bank loans, GEFA loans, bonds, and capital leases. Anything that is your debt, long or short-term debt. That's your denominator. Okay, so here let's practice that. Cash flows, your numerator, right? So that is your A, that is your total operating revenue here on this screen, which is 9.25 million. And your total expenses right here is your B, 7.85 million. And then this is C, which is your depreciation, 1.34. So you take your total revenues, take out your expenses and add back your depreciation, and which is 2.7 million, A minus B plus C or D. Or you can do one thing, is just take simply this 1.396. Simple, take this and add back your depreciation 1.34. It will give you the same 2.7 million. Right, so that's your numerator, 2.7 million, remember that. And look at the slide very carefully right here, what goes in your revenues and what goes in your expenses and what goes your cash flows. Just look at the slide very carefully. Okay, then your denominator, that's very next page of your, from that previous page, that's normally called the statement of revenues and expenses in the audit. And the very next page is the statement of cash flows in the audit. And here you come to this section, cash flows from capital and related financing activities. So this is your denominator, your principal and interest from our bank notes, capital leases, everything will be here, that if you have any, your auditor will put in this area. Here, this borrower has only principal and interest. Your principal is 455,000 and your interest is 181,000. So here, if you add that, it adds up to 636,598. That's your denominator. Your numerator was 2.7 million and your denominator is 636,000. So if you divide that, that comes to your debt service coverage, which is 4.24. It's a quite a decent debt service coverage and it's straightforward. So when you're ready to submit the loan application, you can look into your most recent audit and try to calculate that service from at your end and see how numbers look for you, because that's exactly the way we will be looking at it as well. Okay, so that's our next poll question. What is GEFA minimum debt service coverage requirement? Is 1.05, 1, 1.2, 1.15, or 0.95?
Thank you so much, Shalina. And everyone, the poll is up on your screen, so you can go ahead and start submitting those answers. GEFA's minimum debt service coverage requirement is, fill in that blank. We got about 60% of votes. I'm going to keep it open for a few more seconds. I know everyone knows this answer. Awesome. All righty. We are going to go ahead and close that poll in 3, 2, 1. Great. And Shalina, looks like everyone was paying attention. 100% of the answers were 1.05.
Awesome. Awesome. Great. So we went over the loan application. We went over the debt service coverage and how to calculate the debt service coverage, which is our benchmark. Now, this is our cash flow model. This is actually our underwriting. And so if you see that it's divided into actually two portions, historical and projected. Historical, the data is all coming from the audit, everything coming from the audit. And at the time of registration, someone has asked that question, that how does an organization's financial reports weigh in the loan of underwriting process? So this is the underwriting, and if we don't have the financial reports, we cannot do the underwriting. So we cannot lend the funds without the financial reports, and we would like to have the most recent financial reports. So if you see this is a very clear example. I'm sorry, that's the data coming in from here. Like here, when we were looking at it, we found out that something happened in 2020. We made the call to that borrower, and at that time we found out that there were some one-time unexpected expense. You can see that the expenses jumped by 650,000 give and take. So we checked with them, and they claimed to have one-time expense, and they submitted us their invoices and the details, and based on that we gave them credit of 200,000. This is the interest income coming here. The borrower has outside debt or bond debt that was in their audits. This is the GEFA debt that we got it from our system. The bond debt will continue. GEFA debt will be, one of the GEFA debts will be paying off here, and then the next will continue. And that's the most recent debt that they will incur for this new request they did, and that this is their debt service coverage. This data on the top mostly comes from the loan application. This is the whole loan application, page 9, which I said it's very important. Additional, they didn't report anything, they didn't have anything except this one-time expense. So their page 9 was, everything was 000. But it was quite straightforward, and any borrower can do that. And very simply, it's because this thing is available on the model that I showed you, is available on our website. It is available on our website, and I will walk you through as well that this is the GEFA website. gefa.georgia.gov is our website. If you go to the financials and go to the loan documents, if you click the loan documents here, right here is the cash flow model. Right, this is the loan application that Amanda mentioned. It's available on our website as well, but this is our cash flow model. So if you click that, that's an Excel downloadable file. And if you click that, open it up. Let me open it. Okay, so this will, you will see what the borrowers can do, or you can do is just simply, let's say the most recent audit is 2020, just change that. This will update with the fiscal years. Put your audited information here. It will carry forward, put whatever you have on your loan application and move forward. And then this will give you quite a decent idea how the debt service will look like. Will you be able to meet 1.05? And yes or no. Of course, there are a lot of things goes under behind the scene when we are doing the underwriting, but it will give you a ballpark idea, and I would say you will be very close to what we will see. So let me close down that, but it's easily available on our website. That's how it looks like, and this is our last poll questions. Hint, hint, I guess I asked you to review the slide, one of the slides very carefully. The question is, cash flow does not include service charges, connection fees, capital lease, or salaries. So
thank you so much, Shalina. And that poll question is up on the screen again, guys. This is the last poll question, so make sure you get those answers submitted. All right. I do see some answers rolling in. Again, cash flow does not include blank. Make sure you fill in that blank. The answer options are service charges, connection fees, capital lease, or salaries. Okay. Great, we're going to go ahead and close the poll in 3, 2, 1. All right, Shalina, it looks like 7% answered service charges, 40% answered capital leases, and 53% answered salaries.
okay, so it was capital lease, because cash flow, like if I go back to the slide, the cash flow is available income, which is your operating revenues minus operating expenses. And this is all your operating revenues. This is your operating expenses. And then the debt service have your principal and interest and capital leases, because this is your debt. Capital lease is your short-term debt. So it's part of debt service. Cash flow does not include capital leases. It's part of your debt service. So great, like I'm glad 40% people were listening or understanding what I'm trying to explain, but this is pretty much it about my presentation. Thank you so much, and please call us if you have any questions or comments, because honestly I will rather have people calling us and asking us questions than giving us an empty or blank application, and we will just walk you through. Just pick up the phone. This is our number. Email it to us. And also on our website, we have our phone numbers. Call us and we will more than happy to help you, because we do not want borrowers to get the funding because the application is not filled completely or there is a delay in loan application. So thank you so much, and back to you, Alana.
Thank you so much, Shalina, for all that great information. And I hope you guys picked up on that important point. Do not leave anything blank on those application forms. GEFA staff is here to help you answer your questions and get everything filled out so we can do our best to ensure, you are getting that funding. Also, I did want to reiterate an important point that Shalina went over, which was one of those quiz questions, which I am very happy 100% of our participants got right. That debt service coverage of 1.05 is one of the lowest you will see. So you definitely want to go ahead and get those applications in and take advantage of the loans that GEFA does have. Emphasizing one last point, which I, again, hope you all picked up on during the presentations, both with Amanda and Shalina. GEFA is sharing the exact information that they are reviewing once they receive your loan applications. So if you have questions, go ahead and put those in the questions box or pick up the phone and give them a call. So we are going to go ahead and move right along in our webinar and head on over to our question and answer section. So we do just have a few more moments because we do have a scheduled end time of 11 o'clock. But if you all would like, Shalina and Amanda, do you guys want to stay on maybe an extra 5 minutes so we can get a few of those questions answered? So anyone on the call, as in the audience, if you have 5 additional minutes, we will extend it a little bit just to get some of these questions because a lot have rolled in, okay? Great, so this first question is for Amanda. Amanda, we have a question that is asking, what happens if the interest rate increases after underwriting, but before board approval? Is every loan application reevaluated?
Yes, thanks, Alana. Actually, if interest rates go up, GEFA will not implement those rates, usually for another year, to give borrowers kind of a heads up that it's coming, to get used to that higher interest rate. But if the interest rates do go down, GEFA will usually implement those directly. So, I mean, if we get an application, a year earlier, I guess it is possible the interest rates could go up when they finally do go to the board. But we wouldn't do any sort of underwriting until that board date that they were going to. So for August, we started underwriting in June. So they would know what that interest rate would have been when we started the underwriting in June. It would not go up or down.
Awesome. Thank you. And Amanda, follow up to that, since we're talking about the loan application, will having been accepted for other sources of aid make an application less competitive?
No, not at all. It would just be taken into account for the underwriting purposes. Shalina spoke about that for any other debt that's out there. I do know that there's some funding sources that actually like to see the match, which could be used, GEFA money could be used for match, like for Appalachian Regional Commission. They do like to see that the borrower has that secured before they'll do that grant. But no, it doesn't make them less competitive. We will be open to make loans for anyone who submits their application to us.
Awesome. Awesome. Now, Shalina, we have a question here that is asking, does GEFA make any recommendations that a utility raise their rates?
No, GEFA will never make that recommendation because it's understandable that borrowers are actually the one who is running their system, running their entity. And like GEFA has no way of knowing how they are doing it. So asking for the borrowers to raise rates is, I think it's not fair. And also, like, the only thing that GEFA will share with the borrowers is exactly the same spreadsheet that I shared, which will tell the borrowers that, okay, it is not meeting our debt service coverage of 1.05, and that's what we are seeing that's going to happen in the future. So what are their plans and how they are going to tackle that if that happens? And at that time, we would ask borrowers to submit their plan. Sometimes borrowers say, oh, we have enough cash assets sitting that if that happens, we will use our cash assets that are in our bank. Or we will borrow from some other fund, like, we have a general fund, which is huge. We will borrow it from there. So they will tell us what their plans are in writing, and we will follow it through when the time comes. But directly, we will never ask them that, raise rates, because I think that's not fair with them.
Awesome, awesome. So a follow-up question, Shalina, can a community send their financial information to GEFA prior to submitting a loan application and get feedback from staff?
Absolutely, definitely. You can just submit us that, like, just fill out page 9. Simply fill out page 9 and send us, and we will do some quick underwriting, and we can tell you where we stand and where we see. Of course, we don't know the details, so we can't say 100% how it will be, but at least we can give you some idea. Yeah, just submit us page 9 at that time.
Awesome. Awesome. Thank you so much. Now, I did want to remind you all that if you did miss session 1 of the GEFA Water 101 series, there are questions being addressed as far as eligibility for receiving a GEFA loan and things of that nature. So make sure you guys check out the link that was dropped in the chat box for the YouTube of the recording from the first session. Now, I did want to ask one final question, and this is for both Amanda and Shalina. Amanda, you can lead us off. What is your preferred method of contact for how you can be reached?
I can be reached via email, acarroll@gefa.ga.gov, or my cell phone, which was on the slide, but I can also send it out and can be found on our website. But any project manager listed on the website would be able to answer any of the required or any of the questions that are posed.
Awesome.
So I'm either one, email or phone.
Shalina, what about you?
Either one, again, email me, call me. I prefer phone call because, sometimes happening that borrower is filling up the application and they are stuck at something. Just pick up a phone and call me and I will walk you through. That's much easier. If you email me, it may take me a day or two to get back to you, but I don't mind either. And like my information, and we have another analyst, Gerald Wade, and our finance director, Jamie Harden. Any of us can answer those questions. So feel free to call us or email us. Either way is fine.
Awesome. Thank you so much. So again, everyone, make sure you download those handouts in the presentations. Both presentations had contact information slides, but you can also visit the GEFA website and reach out to any of the project managers or the finance department with your questions to make sure those are getting answered. So Thank you all for attending today's session. Make sure you go ahead and fill out that post-webinar survey that will appear on your screen once the webinar ends. Or if you don't have time today, you can always fill it out. The link will be shared in a follow-up email after the webinar. Again, the recording will be shared as well in that email. So if you missed any part of it or would like to share it with other coworkers, that link will be provided. And as you see on your screen, we do want to announce that you should definitely mark your calendars for the third GEFA Water 101 webinar. It will be on Tuesday, August 31st. And we will actually have a guest speaker from EPD come and speak about the state environmental review process. So emails will be going out so that you can register. If you are not on the GEFA listserv, make sure you sign up to receive those email updates, and we will drop the link in the chat right now for you all. But besides that, we do want to thank everyone for joining. Thank you for asking your questions. And if there were any questions that we weren't able to address, we will reach out to you guys individually to make sure we get those addressed for you. Thank you all. You have a great day.